Hello and welcome to Cardio Live, sponsored by CG Professionals. Speaking to me today is Daksh Gupta, CEO of Marshall Motor Group, on their 2020 results day. Good morning, Daksh. How are you?
Morning, James. How you doing? Pretty good, thank you.
Nice to see you. An impressive set of results, Daksh. I don't think we were expecting anything less from you and the team. Talk me through some of the highlights.
So I think, from our perspective, I think we've all got to acknowledge that 2020 will be, of course, remembered as a difficult year for all of us. But I have to say, I think I'm really, really, really proud of last year's result, and just in so many ways. I think we've got to put some balance on this, James. We did benefit from sector tailwinds, particularly after the first lockdown. And of course, we did benefit from government support, from which we're extremely grateful as an organisation. That said, I really, really don't want to take anything away from our teams, because once again, they delivered an outstanding performance in challenging market conditions. And I think from my perspective, we can't control the market. We can't control global pandemics. Our job is to outperform, and we've done that again. So if you look at sort of some of the headlines, despite the fact that our businesses were closed for 3.5 months, revenue was only down 5.3%, which I think is incredible. Yes, we did benefit sort of from our prior year acquisitions and pent-up demand, as I said, but it was in particular the strong outperformance of the market across all our key operational KPIs that underpin that performance. So if you look at our sort of headline metrics, which is kind of what we all get judged on, if you look at our new car performance was 10% ahead of the market. Within this, retail like-for-like sales were 9.7 ahead of the market. Fleet was up 8.5% ahead of the market, all on a like-for-like basis. And our used car performance was ahead of the market as well. After sales, pretty resilient, down only 13%. I mean, which, considering the lockdowns, I think was incredible. And all of that meant that our second half performance, we delivered more than 30 million in profit before tax, turning around that first half loss to deliver a profit before tax of 20.9 million. And that was actually ahead, believe it or not, of our original 2020 market forecast before any mention of pandemic, and double digit ahead of our last RNS guidance that we issued on the 9th of December. But as I said, we're keeping our feet on the ground. Yes, our guys did incredibly. We've performed incredibly well, and we've smashed the market. But we have to recognise we all benefited from those tailwinds, and in particular that government support. So, we have to keep our feet firmly on the ground.
Daksh, on that government support, if you took that out, what sort of impact would that had on your numbers?
Well, our furlough support was a whisker over £20 million. So, we would have probably posted a small loss or near as damn it break-even position with the furlough money taken out.
So you were clearly staring heavy losses in the face in that early part of the year. At what point did you breathe a bit of a sigh of relief and see things turn a corner?
I think the interesting thing was, we announced our interim results on the 12th of August from memory. And at that stage, we obviously opened the operations up on the 1st of June. We could see it was very strong. But I mean, our first half loss, we posted a loss of, around £10 million. Now, if you sat there and you're thinking, well, you posted around 10 million loss in H1, as a reference point in H2 2019, we posted a profit of 6.9 million. So you kind of think, well, okay, if you made 7 the prior year, that still gets you to a loss. But then you think, well, the market's going to be strong. You'll get pent up demand. We all was sort of seeing what was happening in places like China when they bounced. But did any of us expect to have anything like a £30 million performance? Never in a million years. So at that point, I remember, in fact, I was in this conversation with one of the analysts last night that, when we spoke to the analysts at interims, and we said we're going to go from, a from a sort of near as damn it 10 million loss in H1 to a break even. They were like, well, this seems really ambitious, guys. And we thought at the time it looked ambitious, but that was more because of the results on the 12th of August. That strong trading carried through till the remainder of August. Our September performance was insanely strong. I mean, you might remember we did a profit upgrade at the end of September where we showed our like-for-like new retail and fleet performance was up over 20% ahead of the market. Used was up 15.7%, again, all on a like-for-like basis. So it was spectacular. So, we could see it strengthen through August, but then it was September that really smashed it for us. And, we went from that break even to 15 million. You remember that was that huge upgrade. And then we strengthened even further through October and November, despite the sort of second lockdown. And then we then signaled 19 million. And of course, you've seen today, we've posted 20.9, so double digit ahead. So incredible, really.
Dash, that must fill you with a lot of confidence for this year. Okay, we're in the middle of a lockdown at the moment. Dealerships hopefully going to be opening on April the 12th. Are you hopeful that there's going to be a huge acceleration and that you're going to be able to better this figure for 2021?
Yeah, I mean, look, it's difficult to know, isn't it? Because obviously, it will all hinge on a number of things. One, what consumer confidence is like. I think, I'm feeling pretty positive about that, because we know, if you've seen all the data around how much cash people have got, a lot of people have saved a huge amount of money through lockdown. I think the last report I read on this a couple of weeks ago was talking about 77 billion in savings. I mean, of course, 76.9 of that is just with you, James, but nevertheless, it's a significant amount of personal wealth that's out there. I think the other thing, when you think about, sterling is strengthening. That was 117. That's a really key indicator. So that's great news for our brand partners, because it makes them more competitive. That will enable them to heavily incentivize our customers, which is great news for our customers. And of course, we saw what happened, sort of from 2011 through to 2016, when sterling strengthened. The market just grew and grew and grew. And some people don't like that, because it's viewed as forcing the market. I personally like it, because sales is a good thing for our business, because we build our database, good for after sales. I think the other dynamics will be what sort of bounce will we have. I mean, I think one of the things, I don't think we'll have anywhere near the bounce that we had last year, because the market was down 100% in that last week of March, to 97% down in April, 89% down in May. We're down 38% as an industry in the first 2 months. So we'll get some sort of bounce, and clearly we have seen that the Chancellor has extended some of the support on things like rates. So I'm feeling pretty good, I must admit, at the minute.
And I notice that after sales obviously have a huge impact on your bottom line, as always, contributing 45% to gross profit. Have you thought about how that's going to be impacted in the coming years with increased EV sales? They obviously take less maintenance and repairs, and a lot of the brands that you represent are heavily pushing EVs, and the rest of the market's heading that way for 2030, isn't it?
Yeah. I mean, you are going to see some erosion there, but I think you're going to have, whilst you've got some sort of headwinds coming from things like, the fact that there's less parts in EVs compared to internal combustion engines. You've got less requirement for things like oil, which is a significant part of our profit. There will be headwinds. We have to accept that. We have to acknowledge that, but we're not going to sit here doing nothing about that. So we have a number of actions that we are taking, which I'd prefer not to disclose, around how we adapt our business model as a result of that. So, high level things, accelerating our used car proposition, which I think most people are doing, further penetration into segment 3, segment 4, and evolving our online proposition as well. So,
and Dash, investment in digital sales, it's obviously been pretty critical, hasn't it, to keeping your showrooms open over the last few months and during those lockdowns. Is that something you're going to continue to do?
Oh, 100%, 100%. I mean, if you have a look at our analyst presentation, which will be up around 9:30 this morning, in particular, there's a slide where we talk about what we have done in terms of our online investment, and we have invested there very heavily. So, the introduction of, nationwide delivery options for customers, or collect from one of our 113 brand centers, 14-day exchange program, £99 reservation online, enhanced auto imaging, video, loads. We've done loads to digitalize our business, but also what we've done, and we've talked about this previously, is we've heavily invested into our brand. So our brand last year, since we marketed on TV, so UEFA Nations League, supporting the England football team, live Premiership matches, EFL, FA Cup, darts, rugby, cricket, you name it, we've been on it. We've had over 100 million live viewers to our brand, and over 300 million impressions. So you're going to see us very heavily continue to market that. We're of a size and scale where we can make those investments, and you'll see more of that coming through in the future years.
And on that marketing side of things, are you seeing the benefits of it? Is it translating into sales?
It's always one of those where, it's difficult to prove, and I can't sit here and say, if I give you a good example, I mean, one of the things we announced on Friday, which we were really lucky, we announced that we were sponsoring Luke Humphries, who's like one of the young up and coming players. Now, it seems a bit left field sponsoring darts, but it's actually the second highest viewed sport in this country after football. Amazingly, regularly getting over 1 million viewers. The final on Sunday, the darts final, between James Wade and Luke Humphries, who made the final, which was an incredible achievement in itself, had around 1.7 million viewers, which was fantastic. We did see drove incremental traffic to our website. Fact, what we don't know is, were those people bored and thought, oh, I've seen, marshall.co.uk, I'll find out what that's all about, and I've got nothing better to do. And we do know people like to look at houses, for example, and Rightmove and Auto Trader. I'm guilty of looking at, houses all the time on Rightmove and, looking at cars on Auto Trader, because, people like to do that, don't they? So I can't prove whether it's driving incremental sales. All I can say is look at the numbers that we put out today. And all I can also say is I do feel there's something around, when consumers come into our businesses and they see they're dealing with a name that they recognize, it gives them confidence. So not only do they have confidence by the fact that we're representing some very big brands, but they also have confidence with the fact that they're dealing with a reputable retailer.
And Dash, I know you're pressed for time, but last quick one. 113 dealers now. You've been on the acquisition trail last year, and I'm sure that's going to continue. What's your group going to look like in 5 years' time?
Bigger than we are today.
How much bigger?
Bigger than we are today. I mean, look, I always say, I don't really care if we're 113 retailers in 5 years' time or 1,000 retailers. I want us to be brilliant at what we do. I want to represent our brands fantastically well. I don't want 1 million brands. I want fewer brands, meaningful relationship with those brands, just as we've got today. And that's the most important thing for me there. I want to make sure we're excellent for our colleagues internally. And you've seen, 11 years in a row, Great Place to Work status, 6 years in a row, Best UK Workplace. And I want to do a great job for our shareholders. And again, I think our numbers over many, many years deliver that. So that's the most important thing for me. And if we have 113 retailers in 5 years' time, so be it. If we have 230, so be it. It will be what it will be.
Dash, congratulations to you and the team on an impressive set of results, and best of luck for the rest of 2021. I'm sure we'll be talking again soon.
Thanks, James. Good to see you.
Nice to see you. Thanks ever so much to Dash there for joining us about his results. If you'd like more Car Dealer Lives like this one, log on to cardealermagazine.co.uk and click on the Live tab at the top of the page. I'll see you next time. Thanks for joining us. Goodbye.